Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, who is, of course, the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, it's been, I hate to use the word tricky, and it sounds almost as if we're making excuses, but it does seem to have been quite directionless, the market. If you take into account one day we set ourselves a new record and the next day we pull right back.
Yeah, it's been tricky in the sense that we've been grinding higher. And all of this year, through January, we've been overbought. I mean, we were overbought already coming into this year, and we've just remained overbought. And I think a lot of people out there are saying, "Oh, well, we'd love to see a market pullback to get involved." I mean, I've been one of those people, and it's just not happening. I mean, the market just continues to grind higher, and you get the odd little shallow pullback here and there, maybe 500 points on the all share index. And then that's it. And then it goes up again and makes another new high. And we'll show a chart of the top 40 index just now, which shows that it's been grinding along the top of a channel that we've been in for the last 7 months. And the market remains overbought. So it is a bit of a tricky environment from that perspective. I mean, if you came into the year long and you're still sitting long, you're doing well. But if you came into the year like we did and you're starting from scratch and looking for an entry, you know, what I said to a friend of mine this morning, I said, it feels like, you know, it's a treadmill that's running at 16 kilometers an hour, and you're trying to hop on it, and you're very careful not to hop on and fall on your face, and that's kind of the way I feel at the moment. It hasn't been that easy to hop on board if you're not already on it.
Okay, well, let's talk about one of the trades that you hopped on board with, and that was Aspen. And I suppose it's been a bit disappointing because last year when you entered a trade into Aspen, it got out of the blocks really quickly and it did very well immediately, whereas when you use the words grinding along, that's exactly what Aspen's been doing over the last week or so.
Yeah, it certainly has. So this is the chart of Aspen that's up on the screen at the moment. And just to revisit this trade, I mean, we did this about, three weeks ago, I think. So there's a nice steady upward trend there that goes back all the way over the last year. It actually goes even further back than what this chart illustrates. But you can see how each time the stock has pulled back to that trend line, it's found support and it's bounced off it. And my feeling was that we would once again bounce off that uptrend support. So I bought 625 CFDs for our portfolio at 165 Rand a share, and a stop loss is set at 159. And you know, it hasn't gone down and breached our stop loss, but it's largely just been going sideways. If you have a look over the last three weeks or so, you can see it's really just been grinding along sideways. And it's a bit tricky for me now because broadly speaking, I look at that chart and I still think it's pretty bullish, and I still think that longer term we've got, you know, upside potential here. But as a shorter term trading show, it's a bit frustrating to see it hovering around our entry point. I mean, we're up slightly on it now, but it's gone down, it's gone up, and it's not really moving. So I don't know. At some point, I might look to execute a time stop loss if we don't get some sort of a result here. But for the moment, I'm just going to try and be a little bit patient and give it another week or so before I make that call.
But then how would this square in with one of your aims this year, which is to ride winners? So even if a trade doesn't pan out immediately, does it mean necessarily that it's going to be a loser? So surely you need to be in it for a little bit longer before you make a call.
That's right. What I will say is typically what I found in my experience is that if you've got a good trade, it usually works off the bat very quickly. And the thinking behind that is that obviously I'm doing my analysis and I'm looking at it and I'm seeing a particular setup or particular reason for doing a trade. If there's enough other market participants out there that are doing the same analysis and reading it the same way that I'm reading it, then clearly it's going to become a self-fulfilling exercise, and everybody's going to follow the trade, and then of course it will start to work. Whereas in an example like this Aspen, I saw what I believe to look like a very good opportunity, but yet the share hasn't really responded the way I expected it to. And maybe that in itself means that I'm sort of alone out there in the dark with my analysis, the way I see this. And perhaps there's not enough other people in the market seeing it the same way that I do. And that's why it hasn't worked as quickly as I would have liked it to. So to get back to your question about running the profits and so on, yes, that is one of my goals for this year. But you know, this is not exactly a trade that's got out the gates in a strong way for us. So when it comes to running the profits, I'd be looking more at the trades that are working very well for us and try and run those and try and maximize the profits rather than leaving money on the table like we did last year quite often.
Okay, so you might move a time stop loss into account just so you remove all risk from this trade? Is that one of the things that you're thinking
Or
of?
just to say, you know what, it's tying up capital, it's tying up my focus and my attention, and maybe there's other things to focus on, and let's just rather cut and run. I'm not going to do that yet. I mean, as I say, broadly speaking, I still like the look of this setup. But if it doesn't start to do something fairly soon, then I might look to just rather cut it and look elsewhere to find an opportunity.
Garth, last week, the trade that you enacted was a put spread option. Perhaps you just want to have a quick recap of what that was about and how long that may run for.
Yeah, so it's up on the screen here now. I mean, I'm not going to go into the broader mechanics of how we calculated this. Viewers who missed the show can always go onto the website, either Summit's website or onto traderscorner.co.za, and they can pick up all the past videos of the shows that we've recorded. But in a nutshell, this is the basic payoff of that structure. And really, it's a June 2013 Aussie put spread. So it's a derivative structure over the top 40 index. And really what it means is we've got the index level along the bottom axis over here, and we've got our profit and loss curve along the y-axis. And as you can see, our market currently sits up here north of 36,000 on the top 40. Anywhere above 34,000, I pay away the premium of 1,996 Rand on this structure. If the market was to go below 34,000, then we start to make money on it, and we make a maximum profit of 38,000 Rand when the market is at 32,000 on the top 40 index. And then we start to give away that profit, and below 30,000, then we'll start to lose money on the structure. Effectively, I'll put this in as an outlier in case we see a second quarter market correction, because we often see that sell in May and go away type scenario. Sometimes it happens in April. But I just wanted to have some sort of position in place in the event that we see that sort of a scenario unfolding on our market. It costs me nearly 2,000 Rand in premium. If it doesn't work out and the market remains strong, then I'll lose that premium, but it's not the end of the world. But if we do have a big pullback at some point, then I've got this structure in place, which is quite a nice thing to have as an outlier.
Yeah, and insurance.
Yeah.
Garth, you mentioned you want to talk about the top 40 index and how we've been grinding along at the top of the channel. So there's that graph.
Yeah, this is the graph of it here. So just a couple of points that I want to make people aware of. Well, first of all, we're still sitting in this largely, this upward channel that we've been in since July of last year, and you can see the market quite neatly hugging the top of that channel over there. And that's really since January we've been hugging the top of this channel all the way up, grinding higher. What I have noticed there is if you look at the relative strength index on the top of that graph, the yellow squiggly line, notice that you'll see a series of lower lows on the lower highs rather on the relative strength index, whilst the market's been making higher highs. Now that is what you call negative divergence, and it sometimes is an indication that the upward momentum of the market is starting to wane, and very often that scenario does preempt a pullback. You know, whether it does or not remains to be seen, but it's a relatively reliable indicator usually. So the fact that we're very overbought, the fact that we've got negative divergence, the fact that we continue to hug the top of this channel, I think at some point there's a possibility that we could come back down. And if we were, the first big support area would be the top, would be the bottom of that channel, which comes in at 35,000. And obviously, if we broke below that, then obviously we'd need to look for support levels lower down. But I think the message really is just cautiously optimistic at the moment.
Okay. And on that caution, though, I know you want to pull up a chart of the Resi 10 index because you're somewhat more bullish than cautious on this, or at least some of the shares within it.
Yeah, that's right. Yeah. So this is the Resi 10 index, and I want to bring it up here because last year we largely shunned this index because it was underperforming the market. It was a weak area of the market, and rightfully so. But this year it certainly appears as if we've got a scenario unfolding that is looking a lot more encouraging for the resources index. For one thing, we've got the 50-day moving average pointing upwards since September of last year. We've also got a nice steady rising trend since September last year. And there's this lateral area of resistance at 51,500, which the market recently broke above, and you can see we've been consolidating above that level over the last couple of weeks. So I think any dip down back towards 51,500 or 52,000 on the resources index could probably present a buying opportunity. Certainly this appears to be the area of the market where the action is happening this year. Last year's winners are largely battling this year.
And if you had to look at the strongest and weakest stocks within this index?
Well, I've done an analysis here, basically breaking it down, looking at the stocks that make up the index. And what you can see is in the left-hand column there, you've got the strongest shares. So Assor, African Rainbow Minerals, BHP Billiton, Impala, Kumba, and Northam. And then on the right-hand side, you've got the weakest ones, so Anglo American, Anglo Platinum. Exxaro I put there with question marks because it has been a bit weak and underperforming, but it's certainly starting to look as if it might be becoming a bit stronger and potentially a bit more interesting. And then Sasol and the gold mining shares are just perennially weak. So the idea being that you really want to try and focus your buying on the strongest stocks in the sector. So look for the dips in those shares that are on the left-hand column there. You want to be looking for dips in those shares to be buying. That's your highest probability of success if you want to be getting long of the resources sector in the market.
Well, there are two shares that you want to talk about, and one of them is in the index, and that's African Rainbow Minerals.
Yeah, these are two stocks that I'm going to just be watching in the week ahead. This is African Rainbow Minerals. I know I spoke about this on the show a couple of weeks ago, and at that stage I said watch out for this 198 Rand 50 level, because at that point we were underneath that resistance. Now we've actually broken above it. And what you can see is we've got a nice steady rising trend over the last 5 months or so. We've broken above this 198 Rand 50 resistance. Now what I would expect to happen here is some sort of consolidation, and any dips back down towards 200 or 198, that sort of area, I'd probably look to buy into. And I certainly will be watching this for our show for the next week or 2 or 3 anyway, as a possible entry on the long side.
Okay. The second actually isn't in the resources index, but it's in the financial sector. Why has Standard Bank piqued your fancy?
Yeah, it's Standard Bank. And if you have a look here, I mean, this to me is starting to look very, very interesting. Notice this is a chart going back a long time. It goes back all the way to 2006. But have a look here. We've got this significant resistance at 120 Rand, and we've bumped up against that several times over the last 6 years. And once again, we're in a situation again where we are bumping up against this 120 Rand resistance. And that little pattern over there that I'm pointing out looks a lot like a bull flag pattern. And for my money, I think that there's going to come a time fairly soon where the stock is likely to break out through that 120 Rand resistance. Maybe it'll come after the results. I mean, this next set of results for Standard Bank is going to be pretty pedestrian. We're only looking for 7% earnings growth. But thereafter, we're looking for 15% in the year after that and about 13% the year after that. So that earnings growth to me is justification to expect a breakout here. And I think if we see a breakout through 120 Rand, the stock could quite quickly put on 10 or 15%. So that's something I'm going to be watching very, very carefully, because that would be an incredibly powerful breakout if we saw it.
And if you talk about relative performers, Standard Bank, I think, was one of the relative underperformers against a couple of the banking shares last year. So maybe it too requires its day in the sun.
Maybe it does. Look, I mean, the strongest banking shares in our market still are First Rand, Rand Merchant Bank, Investec lately, and Nedbank. And the weaker ones are generally Standard Bank and Absa. But I think given this chart alone, on its own merits, I think that you could maybe see a potential of short-term outperformance by Standard Bank if we see that technical breakout happen.
Okay. Guys, so what does the portfolio look like, given that it's been a rather slow start to the year?
Yeah, it has been, and I'm struggling to get off the mark. But there it is. Aspen today is looking okay. We're up a little bit. We're up about 800 Rand on that trade now. And then we've got our put spread structure in place, which we discussed last week. So all in all, the portfolio is down just over 2,000 Rand from where we began. So it's down 0.88%. So not very exciting. But I'm still of the belief that patience will be rewarded here. And I think we've got to just keep patient and keep sticking to the principles that we always preach on this show.
And don't force a trade.
Don't force a trade. Forcing a trade is never a good idea. Usually doesn't end well, and for that reason, I am being, maybe a bit slow off the mark here, but I think it's important to just be patient. Don't force a trade. Wait for the right opportunities to present themselves, and I'll act when I see those opportunities that really look good to me.
Well, if we're indulging in saying some, there's the fable of the tortoise and the hare. So maybe this year you are the tortoise rather than the hare. Garth, to end off with, which courses do you have coming up next?
Right, I've got two planned, one on the 2nd of March in Johannesburg and one on the 9th of March in Cape Town. So anyone that's riding the Argus and wants to come and learn something the day before the Argus.
Stock analysis, Argus?
Exactly. Come on the 9th of
Perfect
March to
combination.
my course in Cape Town, and then the next day you can go and ride your bike around Chapman's Peak. If you want to come on this course, email me, garth@traderscorner.co.za, and I'll send you the information.
Okay, great. Garth, we've got to leave it there. Thanks as always for joining us on the program. That's Garth McKenzie, founder and editor of Traders Corner.